Trading isn't hard. Your brain just thinks it is. And that's costing you money every single day. Here's the thing. I'm not going to tell you trading is easy. But here's what nobody talks about. The actual mechanics of profitable trading, those are straightforward. Buy low, sell high. Cut losers, run winners. Risk management. That's it. So why does it feel like you're trying to solve a Rubik's Cube blindfolded while riding a roller coaster? Because your psychology is working against you at every turn. And once you see how this happens, you can't unsee it. Let's break down exactly why trading feels impossible when it's actually simple. Here's something that'll hit home. You probably know what you're supposed to do in trading. You've watched the videos, read the books. You understand support and resistance. You get that you need to cut losses quickly. You know position sizing matters. But you still lose money. And when you lose money, what do? You look for more information, more indicators, more strategies, more complexity. Because surely, if you just had the right combination of moving averages or the secret Fibonacci level or that proprietary indicator, everything would click. This is your brain lying to you. Your brain is wired to find patterns and solve problems through accumulation of information. In most areas of life, this works. Want to get better at cooking? Learn more recipes, more techniques. Want to excel at your job? Acquire more skills, more knowledge. But trading punishes this instinct. Every indicator you add is another decision point, another thing to conflict with your other signals, another reason to hesitate or second guess. You end up with charts that look like a Jackson Pollock painting, and you're more confused than when you started. The truth? Most profitable traders I know use embarrassingly simple setups. I'm talking 2, maybe 3 indicators maximum. Some use none at all, just price action and volume. Stop for a second and think about your current chart setup. How many things are you looking at before you take a trade? Count them. Moving averages, RSI, MACD, Bollinger Bands, volume, trend lines, support and resistance levels, Fibonacci retracements. If you counted more than 5, you're making trading harder than it needs to be. And you're doing it because it feels like you're being more thorough, more professional, more sophisticated. You're not. You're just overwhelmed. Let's talk about why you freeze up before entering trades. You're waiting for certainty. You want confirmation. You want to know this trade will work before you risk your money. And this makes perfect sense in literally every other area of your life. Certainty is good. You want to be certain your car is safe before you drive it. Certain your food isn't spoiled before you eat it. But trading doesn't offer certainty. Ever. The best setup in the world still has maybe a 60 to 70% win rate if you're crushing it. That means 3 to 4 out of every 10 trades will lose. No matter how perfect your entry is. No matter how textbook the pattern looks. And this is where it gets psychological. Your brain interprets this lack of certainty as a problem to be solved. So you start looking for more confirmation. You wait for just one more candle close. Just one more indicator to align. Just a little more proof. And you know what happens? You miss the entry. The move happens without you. Or worse, you finally get your confirmation, right as the move is exhausting itself, and you buy the top. Here's the thing. Trading is a probability game, not a certainty game. You don't need to know what will happen. You need to take trades with positive expected value over a large sample size and manage them correctly. Think about the last trade you missed because you were waiting for more confirmation. Got it in your mind? Now think about what happened next. The trade probably worked exactly as you anticipated, didn't it? You were right about the direction, right about the setup, you just weren't eyeing it. That feeling of watching profits evaporate while you sit on your hands? That's not because trading is hard. That's because you're demanding certainty from a probabilistic system. Your trading plan says risk 1% per trade. You know this is right. Every book says it. Every successful trader preaches it. You've even written it down. Then you take 3 losses in a row. Now that voice starts. Maybe I should risk a little more on this next one to make back what I lost. Or the opposite. Maybe I should risk less because I'm clearly in a bad streak. Either way, you're abandoning your plan because of emotion. And this is where trading feels hard, because you're literally fighting yourself. The actual trading rule is simple. Risk the same amount every time. But implementing it, that requires you to override your emotional brain's desperate attempt to protect you from pain or help you recover losses quickly. Or here's another one. You take a loss, and immediately you want to jump into another trade. You're hunting for a winner to cancel out the psychological sting of the loss. Your plan says wait for your setup, but your emotions say find something now. This isn't a trading problem. This is a human problem that happens to show up in trading. The mechanics are simple. Wait for your setup, enter at your level, set your stop, manage the trade. But your emotional brain is screaming at you to do something different at every step. To enter early because of FOMO. To move your stop because you don't want to take the loss. To take profit too soon because you're afraid of giving back gains. Quick exercise. Pull up your trading journal. Look at your last 20 losing trades. How many of those losses happened because you didn't understand the technical setup? Probably almost none. Now look at how many happened because you moved your stop loss, entered emotionally, oversized your position, or violated your rules in some other way. I'm willing to bet that's most of them. See what I mean? The trading isn't hard. The discipline is. You're trying to predict the market. Admit it. You look at a chart and you're trying to figure out what it's going to do. Will it break out? Will it reverse? Where exactly will it turn? And every time you're wrong, trading feels harder because clearly you're not good enough at prediction yet. Except prediction isn't the job. Profitable traders aren't fortune tellers. They're risk managers who take calculated bets with favorable risk-reward ratios. There's a massive difference. When you try to predict, every loss feels personal. You were wrong. Your analysis was bad. You need to get better at seeing what the market will do. When you understand probability, losses are just statistics. You know some trades will lose because that's how probability works. Your job isn't to eliminate losses. It's to make sure your winners are bigger than your losers over time. This is why trading feels hard. You're grading yourself on prediction accuracy instead of process execution. You're trying to be right about the market instead of being consistent with your system. A trader with a 50% win rate who makes 2 are on winners and loses 1 are on losers will print money. They're wrong half the time, but they're consistently profitable because they understand the math. You don't need to predict the future. You need to identify scenarios with favorable risk-reward, take the trade, and manage it according to your rules. That's it. Think about successful businesses. Does Amazon predict exactly which products each customer will buy? No. They offer millions of products and use probability and data to stock what's likely to sell. Does a casino predict whether the next person will win at blackjack? No. They know the math works in their favor over thousands of hands. You're trying to win each individual trade. They're trying to win over the sample size. That's why they have consistent profits and you have emotional roller coasters. More information should help, right? Wrong. You're drowning in information. Economic calendars, news feeds, expert opinions, Discord channels, Twitter, YouTube, TradingView ideas, earnings reports, analyst ratings. It never stops. And here's what happens. You find a good setup. Your system says take the trade. But then you remember there's a Fed announcement tomorrow. Or you saw someone on Twitter saying the market is about to crash. Or your favorite analyst has a different view. So you hesitate. Or you don't take the trade. Or you take it, but with less conviction, so you exit at the first sign of trouble. The information didn't help you. It paralyzed you. Professional traders often reduce their information intake. They turn off the news. They stop checking social media. They focus on price action and their system signals because they know that most information is noise disguised as insight. Every additional data point gives you another excuse not to follow your plan. Another reason to doubt yourself. Another voice in your head telling you something different. The simple truth, price, volume, and your system's rules are enough. Everything else is optional at best and destructive at worst. Be honest. How many tabs do you have open right now related to trading? How many Discord servers are you in? How many newsletters hit your inbox daily? Now ask yourself, has all this information made you more profitable or more confused? Because I can tell you from experience, the traders making real money aren't the ones subscribed to 47 different analysis services. They found something simple that works, and they stopped looking. You're waiting for the perfect setup. The 5-star, grade A, textbook example that ticks every box. And while you wait, the market moves without you. Trade after trade passes by because something was slightly off. The volume wasn't quite high enough. The candle wasn't perfectly bullish. The moving average was a few cents away from your ideal level. This is perfectionism masquerading as discipline. Real trading is messy. Setups are rarely perfect. The best trades often have something slightly wrong with them because by the time everything aligns perfectly, everyone else has already taken the trade, and the move is nearly done. You need to distinguish between your core rules, the non-negotiables, and your preferences, the nice-to-haves. If a setup meets your core rules, you take it. Period. Even if it's not perfect. Because here's what nobody tells you. You'll make more money taking good enough setups consistently than you will waiting for perfect setups occasionally. The math is simple. Say perfect setups happen once a week, and you have a 70% win rate with them. That's roughly 36 trades a year. Good enough setups happen once a day, and your win rate drops to 60%. That's 250-plus trades a year. Even with the lower win rate, if you're managing risk properly, you'll absolutely crush the person waiting for perfection because of volume. Trading feels hard when you're holding yourself to an impossible standard. Loosen up. Take the trades that qualify. Stop demanding perfection from an imperfect process. I want you to think about something. What if good enough was actually optimal? What if the pursuit of perfect setups was actually costing you money? That's not a hypothetical. It's probably reality. Every perfect setup you waited for was a good setup you missed. And over a year, those missed good setups likely add up to more profit than the perfect ones you actually took. The market changes. Bull markets turn to bear markets. Volatility spikes and crashes. Sectors rotate. What worked last month stops working this month. And you think this means your system is broken. That you need to adapt, to find a new strategy, to switch approaches. But here's the uncomfortable truth. Most traders don't stick with any system long enough to see it work. They abandon ship the moment they hit a losing streak, convinced they need something different. Every trading approach has drawdowns. Every single one. Show me a strategy that never has losing weeks, and I'll show you a backtest that's either fake or incredibly cherry-picked. The simple part of trading is having a system with positive expectancy. The hard part is executing it through the drawdowns without tweaking it, abandoning it, or self-sabotaging it. You know what successful traders do differently? They sit through the pain. They take the losses their system generates without questioning everything. They understand that a string of losses doesn't mean the system is broken. It means they're in the part of the probability curve where losses cluster. This is counterintuitive because, again, in most areas of life, repeated failures mean you should change your approach. Failing class? Study differently. Failing a job? Maybe it's not the right fit. But in trading, if your system has positive expectancy, repeated failures might just mean you need to keep going. The wins are coming. They're just not coming now. Imagine flipping a weighted coin that lands on heads 60% of the time. You're betting $1 on heads each flip, and you win $1.50 when you're right. Lose $1 when you're wrong. Would you quit after flipping tails 5 times in a row? Of course not. You know the odds are still in your favor, and keep flipping. That's trading. But because it's your money and it's happening in real time with emotions involved, you forget the math and bail on your edge. You're probably trading the wrong time frame. Not wrong for everyone. Wrong for your personality and your life. If you're a day trader but you have a full-time job, you're creating stress for yourself. If you're swing trading but you can't stop checking your phone every 10 minutes, you're creating anxiety. The simple rule: trade a time frame that matches your available attention and emotional temperament. Scalping requires intense focus for short periods. Day trading requires several hours of screen time. Swing trading requires patience and the ability to not check positions constantly. Position trading requires even more patience and comfort with larger price swings. Most people choose their time frame based on what sounds exciting or what they think will make money fastest. Then they wonder why trading feels so difficult. It feels difficult because you're fighting your own nature. If you're naturally patient and analytical, scalping will feel like torture. If you're action-oriented and struggle with patience, swing trading will drive you insane. There's no best time frame. There's only the one that fits you. And once you find it, trading gets simpler because you're not constantly fighting yourself. Think about when trading feels the worst. Is it because the charts are confusing? Or is it because you're stressed about being away from the screen? Or bored because nothing's happening? That's a time frame mismatch, not a trading skill problem. You can't fix that with better indicators or more education. You fix it by trading in a way that suits your actual life and temperament. You can't control the market. You know this intellectually, but you still act like you can. You try to force trades because you need to make money this week. You hold losers because you need them to come back. You take profit early because you need to lock in a win. All of these are attempts to control an uncontrollable system, and they all make trading feel harder than it is. The only things you control in trading: which trades you take, how much you risk, where you place your stop, and whether you follow your plan. That's it. Everything else is market's choice. Once you accept this, trading gets simpler. Not easier, simpler. You stop trying to bend the market to your will. You stop personalizing price movements. You stop thinking the market is out to get you, or that it knows where your stop is. The market doesn't know you exist. It doesn't care about your bills, or your goals, or your emotions. It's just price moving based on supply and demand. Your job is to participate in that movement when conditions favor you and stand aside when they don't. You're a participant, not a controller. This shift in mindset eliminates so much of the psychological burden that makes trading feel impossible. You're not trying to make things happen anymore. You're just responding to what is happening according to your rules. Imagine you're surfing. You don't control the waves. You don't decide when they come, or how big they are, or which direction they move. You just paddle to the right spot, wait for the right wave, and ride it when it comes. Sometimes you wipe out. Sometimes you catch an amazing ride. But you never, ever control the ocean. That's trading. You're not controlling anything. You're just positioning yourself and responding. When you lose money, it's comfortable to blame the market. The market was irrational. Whales manipulated the price. The news came out of nowhere. When you make money, you take credit. I nailed that entry. My analysis was perfect. I'm getting good at this. This double standard makes trading feel hard because you never learn. You're not holding yourself accountable for the losses or accurately assessing the wins. The truth is messy, eh? Sometimes you execute perfectly and lose because probability isn't kind that day. Sometimes you break your rules and win because you got lucky. The outcome of individual trades doesn't tell you much. The quality of your execution tells you everything. Did you follow your plan? That's a successful trade, regardless of whether you made or lost money. Did you violate your rules? That's a failed trade, even if you accidentally made money. This seems overly simple, but it's the key to improvement. When you grade yourself on execution rather than outcome, you can actually identify and fix problems. You're not at the mercy of random results. You're building a skill. And building a skill feels different than gambling and hoping. It feels methodical, controllable, simple. Pull up your last 10 trades. Don't look at profit or loss yet. Just ask, did I follow my plan completely on this trade? Be brutally honest. Did you enter at your level or chase? Did you honor your stop or move it? Did you follow your exit rules or panic? Now look at the P&L. I bet your best execution trades weren't all winners. And I bet some of your rule-breaking trades accidentally made money. See the disconnect? Trading requires you to be patient when you want to act and decisive when you want to wait. You need patience to wait for your setup instead of forcing trades. But once your setup appears, you need to act decisively without overthinking. Most traders get this backwards. They overtrade when they should be patient, jumping into random setups because they're bored or feel like they should be doing something. Then when the actual setup appears, they hesitate and overthink. This isn't complicated. You're just letting discomfort drive your decisions. Waiting feels uncomfortable when you're eager. Acting feels uncomfortable when you're uncertain. So you do the opposite of what you should do because you're optimizing for immediate emotional comfort instead of long-term results. The simple solution: get comfortable being uncomfortable. Embrace the boredom of waiting. Embrace the uncertainty of executing. This is a practice, not a personality trait. You're not naturally impatient. You're just not used to sitting with discomfort. The more you do it, the easier it gets. And once you build this skill, trading transforms. You stop forcing trades. You stop hesitating on good setups. The chaos disappears because you're responding based on your rules, not your comfort level. Next time you're itching to take a trade that doesn't meet your criteria, notice the feeling. Don't judge it, just notice it. That urge to act, that's not trading instinct. That's discomfort avoidance. And next time you have a perfect setup but feel hesitant, notice that too. That uncertainty, that's normal. Take the trade anyway. Acting with uncertainty is different than acting impulsively. Let's bring this home. Trading is simple. Identify setups with positive expected value, execute them consistently, manage risk properly, and let probability work over time. That's it. That's the entire game. But simple doesn't mean easy, because executing those simple rules requires you to override your psychology repeatedly, to act when you're uncertain, to wait when you're bored, to accept losses without spiraling, to take profits without regret, to stick with your system through drawdowns. The difficulty isn't in understanding what to do. It's in doing it anyway when every fiber of your being wants to do something else. Most traders fail because they think they need more knowledge, better indicators, smarter strategies, secret techniques. They don't. They need better execution of basics they already understand. Stop adding complexity. Stop looking for the Holy Grail. Stop demanding certainty from probability. Start executing the simple things consistently. Start grading yourself on process, not outcome. Start accepting that trading will always feel hard sometimes because you're fighting human nature. But once you see that the difficulty is psychological, not technical, everything changes. You're not learning to trade anymore. You're learning to manage yourself within a simple framework. And that's a completely different challenge. One that you can actually solve by showing up and doing the work day after day, trade after trade. The market isn't your enemy. Your untrained psychology is. Fix that, and trading gets simple again. So here's your homework. Write down your trading rules. Not a 50-page manual, just the core rules. Entry criteria, risk amount, stop placement, exit rules. Then for the next 20 trades, grade yourself only on whether you followed those rules. Ignore the P&L completely. You'll quickly see that trading isn't hard. Following the rules is. And once you see the real problem, you can actually fix it. That's it. Now go execute.